Hello and welcome back to the channel. Today I'm going to tell you about one simple tool you can use to sell your business in 30 to 90 days rather than 6 to 9 months. And that tool is Seller Carry. Let me tell you about it. I've used it a few times myself and it's worked wonderfully. So the thing with Seller Carry is it does three things. Number one is it increases the size of your buyer pool. A lot more people can qualify with you to buy your business than they can with banks, particularly with SBA lender requirements. Number two, it'll speed your transaction. Usually the second longest tail in a business sale is the financing aspect of it. The other one would be the landlord approval sometimes. And then the other thing is you will make more money because you are going to be a bank and you're going to be charging interest, and the amount you charge is totally negotiable. So those three things can help you sell your business quicker and might be to a better buyer as well. Let me tell you why. So I had a gym and we had a general manager who was great at sales, great at community outreach, fantastic person. And her husband happened to be the number one trainer in the gym. So he was a good trainer, was building his business, his client base. We were taking a cut of that, of course. And unfortunately, this couple had gone through a medical bankruptcy. So they weren't getting finance from anybody. But we financed them to buy the business that they were working in. So all of their salary and all of their earnings went towards the cash flow calculation. It's usually a multiple of the cash flow. And we carried a note that made us interest at a nice rate. And the biggest thing that people will have in like, hey, I don't want to do that. I just want to get my money at the closing table and walk away and not think about this business anymore. Well, I hate to tell you this, but that ain't happening. Even if someone was to come from the outside and get a 7A, SBA 7A loan or a straight commercial loan, less likely, on a small business, because there's not a lot of hard collateral lots of times on service businesses or small retail businesses. So they're just looking at cash flow. And so what happens is it's not going to qualify for a lot of money. And even if it does, the bank is going to say, all right, well, we want the seller involved in this too, so that they have skin in the game. So we're going to have them carry a note for X amount of it, a percentage. And they might even have it on a hold. So that means that they would have to get paid back first for a year or two or something like that. And then the seller note can be taken care of. So let me just go back and define seller carry. Seller carry is when the seller of the business actually finances the buyer, all or part, to buy the business. So obviously there's going to be a down payment so that the buyer does have skin in the game. Highly, highly recommend always insisting on that 10, 20%, something like that. So when times get tough, as they always do in small business, that it's not like, I'm done. Well, like I put a few grand into this. Didn't work out because that could happen. So you want the buyer to have skin in the game. Sometimes the seller carry will just be a smaller portion of the purchase price, or it could be the remainder of the purchase price, which is what I have done 4 times and made significant amounts of interest over the years from those notes. I can tell you all about how to structure it and the default provisions so that it does reduce your risk. But if you are considering selling, you really want to sell, one reason or another, there's something coming up that you want to be out of your business by a certain amount of time, you have to consider seller carry. It is the way to go. And yeah, in rare instances, it might come back and you might get the business back and it might be in a worse state than when you sold it. But you can have the default provisions and the requirements of the loan to say that you have access to their books. You can see what's going on. Doesn't mean you have any power over it, but you can see what's going on in the business and see if something bad's coming down the line. I've never had that experience myself, but I do know a friend of mine who sold the same business twice and made money each time and made money while he was building it back up and then sold it again. It was a heavy lifters gym. So a lot of the equipment is the same now as it was 20 years ago. dumbbells and plates and barbells and things like that don't go down and get out of date as fast as cardio, treadmills, ellipticals, whatever the case may be. So, yeah. And if you're a business broker or trying to help someone sell their business, highly recommend this as a tool. I know you probably will, and hopefully maybe you share this video with them so that they might be a little bit more open to it. I am happy to share details on the deals that we have done with this. And I can't recommend it enough that when I'm talking to people and they want to sell their business and they say like, but I don't want to, I want to be done. It's like, yeah, that would be great, but that's not realistic. So get over it. And then you might as well turn this into something that you can actually make money on and participate. It also makes the buyer feel a lot more comfortable that you have skin in the game to help them through transition, even the challenging times, if there are any. So definitely consider it. If you want more information on that, please reach out to me at geekcoffey@gmail.com or at the website geekcoffey.com. That's GUICOFFEY.com. And I guess the .com is not necessary. But anyway, consider this. And if you have any questions, please feel free to reach out to me. Kind of got off track there. I'm going to try it again. Hello and welcome back to the channel. Today, I'm going to tell you how you can sell your business in 30 to 90 days for more money and probably to a better buyer than you could any other way. Hello and welcome back to the channel. Today, I'm going to show you how you can sell your business in 30 to 90 days for more money and probably to a better qualified buyer than you could by going traditional financing. The title of this, there we go. Ouch. Hello and welcome back to the channel. Today I'm going to show you how you can Hello and welcome back to the channel. Today I'm going to tell you how you can sell your business in 30 to 90 days for more money. Hello and welcome back to the channel. Today I'm going to show you how you can sell your business in less time for more money, probably to a more qualified buyer. And the key to that is seller carry. What is seller carry? Seller carry is when the purchaser is actually financed by the seller of the company. Could be the full amount, could be the amount minus a down payment. That's a way I recommend. Or it could be just a portion of the purchase price if there's some other financing involved as well. So, for example, you're selling a business for $400,000. You want 10% down. The buyer has to come in with $40,000. Maybe you finance the other $360,000 at 8% or 10% or 12%, whatever. Or the third option is the same down payment. The bank comes in with $300,000 and you carry $60,000 or something like that, a portion of the price, which might be a requirement in some SBA-backed loan conditions. So what does it do? Seller carry. It increases the price you can sell the business for because you're financing it. That doesn't even include the interest money that you're going to make. It increases your buyer pool. That's number two. So, and the reason it does that is because there's a lot more people that would qualify for you to finance them than it would for a bank to finance them. And it shortens your time because financing a business sale takes a lot of time. That and getting the lease assigned in a brick and mortar situation are usually the two longest tails in a business sale, a small business sale. So this is a tool that some sellers are against. They think it means that the buyer isn't good because they can't qualify for a loan, or that they're just trying to get something off them for free, or some other, I don't know, concerns that they have. Another concern might be like, no, they want to be done. They want to get their check at the closing table and, clap their hands and be on their way and never think about the business again. Those days are over, I think, for the most part. Seller carry is a part of a lot of deals, and I think it should be part of more deals, to be honest with you. Number one, it's protection for the buyer. The seller having some money on the line still is really good for the buyer. They might be willing to pay a little bit more, and they are going to be paying you interest as well. The other reason is because sometimes, like in our fitness business, for example, some of the best people that are qualified in terms of operational ability, skills, licenses, certifications. They just, a lot of times they don't have the money to buy a small business. But with seller carry, you can bank on their operational skills, all these things that I've just mentioned, and feel pretty good that they're going to be able to run the business, especially if you have insight into their financials and things that are going on, which can all be written into your loan agreement. So you can add in protections to this promissory note is usually how it's transferred. And so you have that benefit of, you might get someone that's not a guy or a gal coming from corporate that wants to try owning a beauty business or a fitness business or something like that. You might be able to sell it to somebody that's already in the business and has a way better chance of succeeding than someone that's coming in from the outside. And the third thing is you can actually make interest. So just for instance, I have sold one of our fitness centers to a general manager and her husband, who was a personal trainer in the gym, for a lot more money and at better terms than I could have sold it to anybody else, because their earnings were considered part of the cash flow. Plus, they were rock stars and they own the business to this day and do very well in it. But I carried a note on the business for 3 years. So I had a loan. It was started at 8% and then it had escalating interest rates. It was amortized over 10 years, but there was a balloon payment after 3 to incentivize the sellers to refinance from somewhere else now that they had operational history in the business and some tax returns. Made it easier for them to get financing. And then they took out the rest of the promissory note and I made money for 3 years. I didn't get taxed on the full price in the year that I sold the business. There's so many advantages for both the buyer and seller. Please, please, please consider this. It's usually the seller that's reticent to do this. And I think people are leaving a lot of money on the table and wasting a lot of time, because then everybody that comes to buy the business either has to have cash, which is pretty rare, or they have to get bank lending, which is, let's face it, kind of a pain in the butt to get. And it takes a while. And banks they're going to put collateral on virtually everything you own in order to give you this business loan. So consider all these things. If you have any questions, please reach out to me. You can contact me through here, and I am happy to answer any questions. And if you're a seller, please consider this. If you're a buyer, please ask for this, because the deals that go through, even through transition, go a lot smoother when the seller still has some skin in the game. So sorry, sellers, but that's a fact. So this is seller carry, just a little summary on it. Happy to provide more detail. Thanks for listening. I hope it helps.